Hello, everyone. This is Linda Whitener, and we are going to be starting our webinar called the Reconciliation and Month End. And we're going to be going through several different modules and looking at the reconciliation and then some reports for the month end. So what we're going to be learning today is to identify some common reasons why you might be out of balance, and then how to execute the necessary steps to solve those issues. We're going to perform some basic reconciliation tasks, and the modules that we're going through is accounts receivable, accounts payable, job cost, cash management, and general ledger. And then also we're going to find and launch the desktop reconciliation tool, which is in your listing where your listing of modules are. But a lot of people don't realize that that's out there and hidden. So first of all, to understand what the data, we have to look at the file structure. And so we have different types of master files that just hold the static information. And those master files in anything that's called setup is where you go to add somebody, a vendor, a job, a customer, a GL account. Those are that information is held in the master file. And then we have transaction files that holds anything that comes from tasks, invoice entry, direct cost, entering your invoices for AR, those types of things. Anything that is date specific, that stuff is held in the transaction files. In most of the modules, we have three different types of files. There's the new, which are unposted items, current, which are what has been posted, and which they move automatically from the new to the current file. Then we also have the history file, and that is any transactions that you've deemed that they're old enough that we can move them out into the history file, and we therefore past years information. And so you don't always have to pick the history file to get anything that's current and relevant for today's reconciliation. And so it also speeds up your reporting because it doesn't have as much data to go through. And so usually at the end of the year, we perform several tasks in all the different modules to move stuff to history. So then there's also some summary fields that hold totals. And so like GL account balances, the job cost totals. There's also in accounts receivable, some of the reports can run off some summary fields in that module also, which also helps reports to run faster. So now to understand the file structure is how does it move from where you're entering it and go to the other modules. So the entries flow from one application to another, and that determines your post and interface settings in the originating application, whether it'll be posted once you get out of doing a particular task, if it's posted immediately, or if it's going to be manually. And so you set that once in that application, and people normally don't change it. And it's also the same area that when we're doing an implementation, whether you're live or not, it's the same little area. So the data, what your application of origin, let's say it's general ledger. Prior to posting, when you're entering, doing a journal entry, it goes and it sits in the new .glt. So just by the name of the file, you know what it is. It's the new file for the general ledger transactions. After you post, it goes to the master for the general ledger master file, and it also moves the transaction to the current GLT. So it is posted and the transaction sits here, but it also has to update the master file with the numbers that you just gave it. And when that gets into a past year and you don't really need it in your current file anymore, then you move that to the history GLT. So that's where everything that you do in General Ledger doesn't talk to other modules. So that's a pretty simple and straightforward scenario right there. But now when we go to AP, we have accounts payable as the application of origin. And so we have invoices and checks and manual checks. Prior to posting, they sit in the new accounts payable invoice file. And so after posting, it'll update the master.apm, accounts payable master file. The transaction goes to the current.apt, but then it also sends the information to the new.glt. So it sends the information to the general ledger file, sends it to the job cost file, and if you did some checks or manual checks, it also would send it to the register CMT, so cash management transaction file. So if you notice, cash management is the only one that doesn't say new, current, or history. It has a register file. And then there are some for the history file also. But that's what I said. Most of the modules do have the new, current, and history. There's a few of them that name it a little bit different. Then once you decide to move that transaction, the invoice, after, and it can only move after it's paid, it goes to the history accounts payable transaction file, and also the history accounts payable invoice file. So in accounts payable, there's actually two different files that it stores stuff in. The one is the transaction and one is the invoice file. So the file structure and reconciliation, well, why does it matter? What do I care what the data does? For one thing, it's that if something is wrong, understanding where things might be can help you fix what's wrong. And then also we want to help promote the best practices in the workflow when you go to start reconciling and doing your month end. Where do you start? And it makes it easier to correct any kind of errors, understanding, you know, where did it originate at? We always usually want to go back to the application of origin to fix something if it all is possible. So correct the error in the application in which it occurred. That's number one. If you miscoded an invoice, go back to that invoice and change the coding there, and it will send out correcting entries to job costs, to general ledger, and it will fix everything where it had gone before. It keeps you from having to go to make an entry in job cost to fix something, maybe in general ledger. So it's just easier to go back to where it started. You could also try a positive or a negative entry to correct within the application, especially if it's for a prior period or a prior year. You could make the entry to the same debit and credit account to affect the application, but not the general ledger. So if you did something in job cost and everything was okay in the general ledger, but not in job cost, you could do it to where it doesn't truly affect, it's an in and out in the general ledger, but it does fix something in job cost. And also in cash management in the register having to do with the money, it's in the right bank account, but something else is wrong. And these are just dreamt up scenarios, but definitely not the recommended way of doing things. The top one, go back to where it occurred. That's how you usually want to fix something. Oh, and then there at the bottom, so I said, go fix it where it occurred. And I do state that many, many times because that's how we generally want to fix things. So when we're doing reconciliation, control is the key. So you want to have a plan, and it's kind of like a checklist of what are you going to do first and who's going to do it, and making sure where are you at in that reconciliation. So, you reconcile throughout the month, and also looking at the posting journals, because if something was entered with a future date and you didn't really catch it as you were entering it, but on that journal, usually at the end of the journal, it gives you all of these messages. It's a future date, or it couldn't post a payroll check for some reason, whatever, or if it's a future period to where the GL is, it's telling you all these things at the bottom of that journal. So even though if you have everything going to a print file, at least go and open up that print file and looking at that journal, even if you just go all the way down to the bottom to see, is it telling me anything? And especially if you have trouble with reconciliation at the month end, then take the time to do some reconciliation throughout the month, because it's always easier to know when to pinpoint it. Okay, the first 15 days we were fine, so it happened after that. And that's, you're looking at date stamps and stuff, because you could always post to an earlier day in the month, but just do your reconciling more often till you pinpoint a lot of these things, then start getting them corrected. then within a couple months' time, people know what they were doing wrong and they stop doing that. Also, you could do a soft close. And so I'll show you a little snapshot of where that is. And so whenever you go around, you ask everybody, has everything been input for, let's say it's July, so we're closing June. They say everything is in for June, you could make a soft close for June, and then nobody can enter to it anymore, but you haven't officially rolled it into July yet. You can also, if you have My Assistant, you could utilize My Assistant to monitor any module settings if somebody's going in there and changing anything. Then have your listing of tie-out reports just to cross-check the data. And then the control sheet to keep track of where you are at. And so you can make sure that yes, you did reconcile that particular module. So in the plan, determine the steps and tasks needed for reconciliation, and then who's going to perform them, and then what order they should be performed, and have a checklist of, in a particular module, what you need to do. And it can be one of the documents on your favorites. And we talk about that in our tips and tricks session about how to get the documents, like a Word document, an Excel spreadsheet or whatever, onto your favorites. So you just click there once and it'll bring up that document without having to get out of Sage and go find it in Excel. So reconcile throughout the month, and you can use templates with pre-entered coding. And so when you have a lot of monthly entries that are routine, and it cuts down on the opportunities to make mistakes. If you have it on this sheet and you just fill out the dollar amounts that you want that time, and then enter it from that coding sheet, or you could also use the automated entries, the recurring entries, which is in general ledger. So for instance, you could have your depreciation always entered out there, because unless you buy something or sell something, that number is not going to change. It can be on your automated entries. You can also do some insurance allocations, just some different things that are the same. But even if their dollar amount does change periodically, you can go in and change that dollar amount before you post that recurring entry for that particular month, and I'll post it with that new dollar amount. You always want to check the new file for unposted entries, and those would sit in job cost, cash management, and general ledger. Because if there's anything that's sitting in the new file, it's not going to balance. So if you're trying to tie job cost to GL and it's posted in job cost, but it's not posted in general ledger, then you'll never get the two to balance because of those unposted entries. And then at any time you could balance AP and AR to the GL during the month, just to make sure that it's reconciling. So you can check periodically just and looking at your new file to make sure that everything is being posted. And that's whether you're on automatic post or a manual post. Because if you're on an automatic post, if you enter an invoice in accounts payable and it's set to automatically post everywhere, then it usually just goes ahead and posts. But if you void a check in accounts payable, or you void an invoice or change an invoice, there's sometimes that those reversals do not get posted to GL because it doesn't pick them up on that automatic part of it. So then you have to go and post yourself. But if you're checking it periodically and saying, just looking out there in the general ledger of the new file to see what's out there, you'll see a bunch of entries with REV in parentheses, which means it's a reversal. So when somebody is actually doing that kind of entry, to have it in their mind, this is not going to automatically post. So then to make sure that somebody goes that has access to general ledger will go and post it. You could set up a My Assistant alert when there's something in the new file. And then it just all helps in reducing the amount of effort required come reconciliation time. But it's just, you can post your new files in all the different modules at the end of every day, and it will pick up anything, any reversals that happened, and go ahead and post them. But if there's something out there that is too far out into the future, or let's say possibly the batch had gotten out of balance for some reason, there's certain things that maybe it can't post. And so again, if you send all these printouts to a print file after a post, go look at that printout to see if there's anything that it's not posting, or just really look in the new file to see if you just posted, there shouldn't be anything left in there. So if there's something still there, you need to investigate that to see why was it not posting. So the soft close, it safeguards the month you're reconciling. So you want to lock down your previous data so that nobody, including yourself, can write to the month that's being reconciled. And also your numbers aren't going to be changing and moving once you've printed something out of one module and you think you've got it done, and you go to look to general ledger, but by that time then somebody's done something and it's changed the numbers. So it just keeps the numbers consistent out there. So even making it a little difficult for yourself, it's a good control that you have to manually open the previous period to make the entry. So if you see something that you didn't do and you want to get it posted into that previous month, you have to uncheck the box. And I'll show you what that looks like in just a second. So again, it's the way of protecting last month's data from being written to without performing a final close of the month. That's why it's a soft close. And then every month, as part of the reconciliation checklist, you go to GL, task, open close posting period. And if you have multiple companies, you want to select the company that you want and put a check mark in that current period. And so this is what it looks like. So if you went to task, open, close, posting period, all your previous months would have been closed, and this is the month that you're working on. You can put a little check mark right there, and then you would click accept. And so then, as far as the system is concerned, nobody can write to that period. But you haven't officially rolled it to where the next month, where February would be shown there as the next month that's open. And then this second part that makes that work is that allowing entry to a closed period. And this is in GL. Under GL settings, you do not want this checked, because if it's checked, the system lets them make the entry, but it's still, if it is a closed period with the little check mark there, it wouldn't post it. So it's going to stay out there unposted, but we don't even want the entries coming in. So that's why we do not allow entry to a closed period. So each module has settings that you don't want changed. And that's where my assistant can warn you if anything in the settings changes. But also, if somebody is not a privileged operator, you know, that they can do anything and everything in the system, if they are not one of those people, then don't give them access to settings, because there shouldn't be anything that they need in settings. So you go to whatever module, and then whatever that module is, settings. And so here is, you know, we want automatically closed period to be set with the check mark, and allow entry to a closed period not checked. But the edit transactions created outside the GL, that one is check marked, and we do not want that check marked. That means that in change entries in general ledger, you could go and change an entry that came from accounts payable, and that is highly not recommended to do, because if you went to accounts payable and you're researching something, it's telling you one thing, but you changed it in change entries, so it's saying something completely different. And whenever you use change entries in GL, you do not get an audit trail. It looks like it went there from the very beginning. So that can confuse anybody if they didn't know that it happened. And also the force zero proof, we don't want it by project. We want it by entity. So these are some of the things that could mess up what you're trying to do in general ledger. As on your tie-out reports, it's a good idea to create some tie-out reports that help you to see that not only are your modules tying out, but the financial statements are agreeing with one another. So the reports that help you to tie out to GL, and there's a listing of them here, and there's the AP, a period end report for AP accounts. I mean, the look of it, I mean, it's not very pretty. It just listing what came in, what went out and stuff. So you're seeing that it ties, but I think one that people understand more when you look at it is an open aging report as of that cutoff time. So it would be like June 30. At any time you can run it, and the aging date is June 30, and just making sure that that report ties to the GL. Cash management, there's the bank reconciliation report. So after you do your reconciliation and you think, okay, you know, I'm done, I was able to finish out of there, my differences were 0, and that's all fine and good, but still, does it tie to general ledger? So we need to look, is that the balance that is in the general ledger? And that's what this report does there. The AR report, there's a detail aging by customer. And so it's just an aging report that you want to make sure that you tie out to the 1 or 2 accounts that you have for accounts receivable. And then general ledger, you want the trial balance. And 2 reasons it could be out of balance. And one of them is that you, I might have it stated on the next slide, I'm not sure. One of the reasons is that if you added a new account and it falls outside the range of the trial balance, and then it's not even printing it on there, or if there's something that's sitting in the suspense account. So use your control sheet. It just keeps track of where you're at during your reconciliation. And then also, how many times have you found an error only to find someone, perhaps even you, entered something into a previous month after the financials had been printed? And so that might just be that they need to be reprinted or an item posted. So you just want to keep track of where you're at. Okay, so then we have on the desktop, and this is also one of the reasons for people to use the desktop instead of the TS main way. I know when I go out to customers, some of them still use TS main and some of them use the desktop, but there are certain features on the desktop that are helpful. So under Sage, the additional tools, and then there's reconciliation. The ones that have this reconciliation tool processes is accounts receivable, accounts payable, job costs, cash management, and general ledger. The different sections of it, there is a dashboard, excuse me, that gives you a quick overview of the status and also the basic steps. To post, there's a little button that takes you right to posting. There's data verification, summary reconciliation, detailed reconciliation, common causes, out of balance, and period end reports. So they give you information on what reports to run and stuff at these different levels. And I want to show that to you real quick. Let me get through with this part and we'll go over there to show that to y'all. So with accounts receivable, you want to post all of the affected applications. So in AR, you're going to receive entries from the billing module if you're using that, and then also the AR module. And then that's all those entries go to GL. So you want to make sure that everything in regards to accounts receivable is posted in those three modules. There's the AR summary report that you would print. And then if that AR summary report is in balance with general ledger, then you don't need to go any further. You can skip to step 7. But if not, then you want to print it out more in detail. So some of the detail reports are totals by batch. You want to make sure that in AR, totals by batch, if you have batch number 501 coming from AR, that you see batch 501 in general ledger, just to make sure something didn't happen to that data and that it's not there. So some of the common causes to be out of balance is some unexplained entries. Maybe somebody went into GL and made an entry to the accounts receivable account, which you don't want that to happen. Any unposted transactions in the general ledger. Wrong account override. So when you're entering an invoice, it comes up with the GL accounts that it's supposed to use, whether it be, from the job, from the AR or the receivable or the retainage account. And if somebody changes those, then that would make you not balance. And then any unapplied cash receipts, because there's the unapplied cash receipts, they do reduce your accounts receivable balance, and it'll show unapplied customer cash receipt on your aging. So it reduces that balance there. But if those unapplied cash receipts sit in a liability account, you have to take your accounts receivable dollar amount less the liability of unapplied cash receipts. Then that total is what should be on your AR account. Some people have those unapplied cash receipts in a liability. Some of them just have them going to the AR account. But you have to know how y'all do it, and then you'd know what you need to do in order to balance your AR. So you want to keep going through that process as many times until you find all of the issues. And then you would run your period end reports, your AR aging detail by customer, and the period end report. And so the common causes on that desktop it will go through and have the whole list of ones there to help you through that reconciliation. Then AR adjust receivables, the accounting date error, because when you void an invoice that asks for an accounting date, it's the very first one that you put in when you go into adjust receivables, or if you are just adjusting the invoice, then it's in the grid of that invoice when you pull it up. Each line has an accounting date on it. So it might use the first one or the second ones that are in the grid. And then there's an accounting date versus a transaction date. So it's going to be always the accounting date that you want to use on your reports. I know the agings, that there's a little drop down that says, do you want these run by the accounting date or the invoice date? And if you're doing reconciliation, you always want to use accounting date. Because invoice date, you can use that for other purposes, but it's the accounting date that you use for your reconciliation. So in accounts payable, we want to make sure that everything is posted from AP and general ledger. So the data verification reports, there's an open invoice report and there's an open invoices report with the cutoff date. The difference between these two, of course, just in the title of them, the cutoff date. So this one here, the first one, if you haven't entered any invoices, let's say for July, then you'd be fine with that first one. But if you've entered ones for invoices for July and you've done some July payments, we have to use the one with the cutoff date, because it's going to go back to look at how did it stand at the end of June. So it will disregard any new invoices that were put in with the July accounting date, and it will disregard any payments that were made with July and give it to you with that cutoff date. So then there's a summary reconciliation report and a retainage report. So if those balance to your AP trade and your retainage payable account, then you can stop here. You don't have to go any further. You can skip to 7. But if not, there's the totals by batch report and retainage totals by batch report that you can print to see, are there some batches that aren't showing up, and give you some common causes of what's out of balance. Again, any unexplained entries, an entry spanning 2 accounting periods, like if you went in to change it and it was put into 1 month to begin with, taken out of the next month, and then put back in. So those are that question that it asks, where do you want to use for the reversal? So you just need to know what you need to answer that question with. And any unposted transactions. And then again, repeat that as necessary. And then you would run your period end reports for the AP accounts and your period end report for the retainage payable accounts. But here is where, for the final reports, I just prefer that open invoices with a cutoff date. And so to find any other common causes, if out of balance, that reconciliation desktop, and then your change invoices with the change in the accounting date that I was just talking about there might have been answered incorrectly. So Lori, have there been any questions?
Yes, we do have one question, and it is, where do you go to find unposted transactions in GL?
Okay, I will do that, and that will get me to start up. Give me just a second here. I didn't start this up. So I'm going to use desktop. Okay, so in general ledger, and just like any of the other ones too, just doing an inquiry, and this one is on entries. And you always want to choose the new file. And so it would show you transactions that are out here that are not posted. So, you know, if we're closing June or whatever, these May ones would definitely be a problem because they're even for the previous month. But let's say we're closing May. So we would need to make sure that these May transactions are getting posted. The December ones, we wouldn't worry about. I mean, as long as we knew that we had entered some stuff intentionally out there for that far out into the future, they would be okay. But we're mainly concerned with the month that we're closing and before, if we see any dates there. And you could always use your funnel, the condition, and say that the accounting date is less than or equal to 05/30. Put in whatever month you're closing there, and it will get it down to just the entries that you're concerned with right at this time. The other ones you may need to check into, but it's not a concern right now. So I don't go to account because that gives you the account layover on the top. We want to get to the raw entries. And then this is the entries by batch. Shows them to you with the batch layover on top of them. But while we're out here, I wanted to go to the reconciliation. And if you've never opened additional tools, this is what is out here. And I know I have an issue with my reconciliation thing launching, but the log is just an Excel spreadsheet that came up. So here is where you can type in your issues that you've had or your list, you know, what you want to reconcile and and who's done it and that it's in balance or not. So that's just a spreadsheet. But then here's your monthly tasks workflow center. And if you see, they just open up as a little tab up here. Let me give some more real estate. So here's where you can launch the bank reconciliation, or this is the reconciliation task. Then here's your dashboard and the tool. And then down here is the close month. So it tells you what months your payroll, job cost, and contracts is in, and then general ledger. If there was multiple companies, it would have the companies out here. Takes you to just printing reports, not any specific one, just the report menu. But then when you have your reports done for closing the month, it's telling you that accounts payable and accounts receivable, there is no close month feature on those. All you do on those two is close year. But here's the close payroll, close job costs, contracts, and GL. And so after you've done that, it's still going to say May here until you refresh it or close out of it. And so then there's age receivables and then recurring GL entries and auto reversing entries. So it is a nice little tool to have. And I clicked on this recurring GL entries. I don't have any set up out here, but when they're the blue hyperlinks, they do take you directly to that task. So again, that's under additional tools. Job cost reconciliation, you want to make sure that job cost and general ledger, everything is posted. Your data verification, close month validation report. Then there is the job cost summary report. If those all tie out fine, then you can go to number 7. In detail, there's the totals by batch. And then there's job cost general ledger totals by batch. Out of balance, unexplained entries, unposted job cost transactions, and then account override. Because usually by design, we have job cost that says usually a hierarchy or what posts it to general ledger is the category. And so if you've left that open to where people can change that, then it might have been sent to another GL account, and why it's not balancing to the category. And then there's GL reconciliation report and also a WIP report. So look in the reconciliation desktop for any other common causes. AP invoice coded to job cost without a job number. So if usually your cost of sales numbers are in 5,000s, so let's say in accounts payable you coded an invoice to a 5,000 account number, but you don't have a job number with it. That would cause that 5,000 account number to be out of balance with job cost because it was never sent to job cost, doesn't have a job number on it. And then a direct cost entry created with the default accounts overridden. So again, it brings up the GL account number, but somebody changed it. So cash management, post everything in cash management and general ledger, bank accounts verification report. There's a summary report, out of balance for unposted transactions. Also, transactions entered directly into GL cash accounts. So somebody did a GL entry and went to the cash account. That's a no-no, just like it is to put an AP invoice in and code it directly to accounts payable. You don't do that. So we don't want anything hitting cash unless it came from cash management, like your interest and all. All of those have to go through cash management. Repeat as needed, and then you do your reconciliation from your bank statement, and then you want that bank reconciliation report. And at the end of the month, I do that after you've reconciled, you do that bank reconciliation report, but then I always would put a copy of the current ledger for that cash account with it to prove that here's my reconciled balance and that balance to the GL at that point in time. So if something comes up and changes later, then you have what the GL looked like at that time, the beginning balance, all of the entries. So it would be easier to find what hit this after I had reconciled. Was it that something got posted previously, which then you would have, if your beginning balance is different, you'd have your previous month's reconciliations that you could go back to look at those, or you have the current one for the month that you are reconciling now to say what's been added to this report and be able to find it. And then you would just go and reprint your bank reconciliation because now that check or deposit or whatever is added to that report and it should be fine. So there are several causes, cash management being out of balance. On the reconciliation desktop, these are KBs, they're bulletins, and the number that you can pull up to read more about it. The enter credit deposit without using AR, reconciled transaction as a future date. That's the bulletin. So if something cleared your bank on the reconciliation today, but you have it in there as for an accounting date for next month, well, that would put it out of balance to the general ledger because it hadn't hit the general ledger yet according to the accounting date. The reconciliation status on a previously reconciled transaction was changed. So from a previous month, somebody, checked a box that said I can change the reconciliation status. and it was reconciled before. Now they made it open. So all of a sudden now it's showing back up on your bank reconciliation as an open item. And that's what would put it off. A check is voided with a future date. So if you have a check that was voided out there when you're going through your reconciliation status, I'm sorry, the bank reconciliation, you don't want to just automatically clear all voided checks. Just leave them alone going through the first time. Make sure that you're reconciled. Then come back in. You can either print a report, your bank reconciliation, or when you go back in, put a condition on it. The voided date is on or before the date that you're reconciling. Then you're safe to clear all those, because if it was voided for with a future date, like it wasn't voided until next month, you need that check to remain unreconciled or with the status of open out there in order to for that month to reconcile, because it hasn't been taken out or put back in the GL yet. So you need it on your reconciliation report. The register balance is not correct. It does get out of whack sometimes. We just have to go in and fix it. Here's the bulletin on that. And then also, if your account is has payroll checks, you need to consider the accounting date for the payroll checks, because it would hit general ledger for the accounting date, but when you're looking at cash management, it's looking more at the check date. So if you're off, it might be the net of that last payroll. And then that's just a notation that you'd put on there, because really everything is fine. So general ledger, I'm sorry to keep y'all past the hour here. Ensure all entries are posted in all modules. And so if you look at where we started in accounts payable, I mean, we did it in a particular order, with general ledger being the last one. And so we want everything posted from all the other modules. Look at your current ledger. There's a summary report. Everything is in balance, but there's a totals by batch report that you would relay to all the other modules to make sure that all the batches had showed up. Some of the causes for being out of balance is entries have been made to a prior year. So if it was made to a prior year, then your trial balance this month will be out of balance until you reclose the year again. And it knows that you're not at your year end. And so it's just going to roll those prior year entries to retained earnings. But otherwise, this month or any month will be out of balance until you close that prior year. So your period end reports, you want to do your trial balance, your current ledger, and then if you need to, your year-to-date ledger. So the causes out of balance, adding a new account and that it's not in the range of the report design that you're using, if you're pulling it from the financial statement designer, entries are in the suspense account because a suspense account does not show up on the financial statement, so it'll be out of balance. You want to look that your report totals of your trial balance come down to 0. So that goes back to if you had some prior year entries, it's not going to come down to 0. You're going to be out of balance because those prior year entries will have a beginning balance in your income statement accounts until you reclose the last year. And that's because of previous year's entries. So any questions, Lori?
No more questions.
Okay, thank you. And I think that was, yeah. So to recap, we're looking at some basic reconciliation tasks for accounts receivable, payable, job costs, cash management, and general ledger. Identify some common reasons why you might be out of balance. And we went and looked at that where the reconciliation tool is and your month end area there in additional tools. And they have the other modules. I encourage you to look out there to see what the other data entry items are for just regular daily use if somebody likes that kind of look on it. And so you're done, and we'd appreciate any feedback. You will be sent a link to this session, and there's some more resources out there on Sage CRE, and you can contact us at clientcare@onpoint-software.com. And, like I said, we did go over just to make you aware of some things out there. But if there's anything that we can do to help you to get in depth, if you've had a real problem with reconciliation, we'd be glad to take a look at it with you, help you out with that, and then just train you, on what those were, what your issues were, and then try to help you to where you don't have those issues anymore. Get some other policies and procedures set up so it'll run like clockwork. So we appreciate your time. And again, sorry for going over about 15 minutes, but just a lot of information that we want to get to you. So just let us know if there's anything that we can do for y'all. Thank you.